Okay, thanks everybody. Then I welcome to the stage Nisha from Citi, Emerging Solutions Lead. Also Kaya, Head of Business Planning at Sony Bank. We have seen you before. Very good presentation. Christopher from Deutsche Bank. Here, as you know, half of my heart is blue. I worked 17 years there. The other half is red, which coming from Barcelona makes a lot of sense. And Benjamin, which is the head of innovation at HSBC. Also, I think we have a very plural panel. I mean, representatives from Japan, Shanghai, Europe, Frankfurt, and UK, London, which I hope makes this a very fruitful conversation. Okay, then for me, what is important about this panel is that somehow, if we are not adopted by financial institutions, then I think that the case of identity and ZK will still remain very niche. Okay, then although everybody knows that we are very focused on Web3, this is also the spark, something that will trigger the whole concept. I have a lot of hopes with you guys, with the regulators. I think that the last 2-3 years they have been more open. When I speak with the BIS, with the European Central Bank, with His Majesty Treasurer, now they listen more to us, and I think that could be something. As 3 years ago they were totally blocking us and they were not listening. It seems that the flute is opening. And yes, my idea is to have with you an open conversation, that you share your knowledge. You are the experts. You have all brilliant knowledge and careers. Then for me, the first open question, and maybe we start with Kaya, and we come from there here, is which is the role that you think that the banks can play in the SSI ecosystem? How do you see that? How do you envision your role in this new paradigm?
Okay, so as I explained about our activity of Web3, we expect Web3 itself would be expand in the market. And also, as Sony Group, we can deliver lots of use cases with the entertainment experience or service. And we want to encourage that. But on the other hand, based on the blockchain, the digital assets need to be converted with blockchain. So that's why, token would be important to exchange the value. And also, to combine it with the Web3 and the world of Web2, KYC would be important. In that time, on that point of view, banking service would be important. So to support all the banking or financial functions, KYC is important. So that's why on that timing, the bank can take some role on that function.
Okay, thanks. Chris?
Yeah, so I think just taking 1 or 2 steps back, I would say the banks used to be, or at the moment still, custodians of data and financial services. And the logical next step would be that they also kind of engage in managing those identities in the future. And I guess they are in many ways uniquely placed to that, because firstly, they have connectivity to a lot of economically active participants out in the market, be it in the retail or the corporate space. Also, they are to some extent trusted, because there's a lot of regulation that we need to deal with all the time, which then also has like a good starting point or connecting point to the regulatory bodies. And there's a lot of data passing through the economic life cycle. Yeah? And just if you consider the normal self-sovereign identity triangle, right? You could, as a bank, you could act as an issue of verifiable credentials, which is something, if you're trusted, if you have the data, it's an easy step. Secondly, as a verifier, and I think we will come to that point as well, under EIDAS, you are also at some point actually required to accept those, to make certain processes easier for clients to connect. And also in a bank-to-bank relationship, you can act as a holder of verified credentials. For example, and I think we will discuss that also in terms of how digital asset use cases might be of importance.
Yeah, so HSBC is in 60 different countries, and so this has always been a challenge. How many of you have been an expat before? How many of you had a pleasant experience opening an account in a foreign country?
No.
Okay, I think many of us have had frustrations in this particular space, so it's nothing new, especially to global banks, in that we may already know who you are in one entity, but we can't then apply that in another. And so this has been a big frustration throughout Web 1, Web 2, and now we're here at Web 3. Web 3, I would say, is the idea of ownership. And one of the challenges that we've always had in banking is that you're expecting that we're going to custody everything. And that works really well for security and that we're going to provide a reliable service, but it does create a big challenge when we start to go cross-border. And I think this is where the opportunity now is, in that we have technology that didn't exist 20 years ago that is immutable, allows records to potentially be put, revocations to be put on chain, and works in a cross-border type setting. I think that's going to be where the banks can really look at the issuance and verifications of what we see there, and that can really help create a better customer experience, even in just traditional finance use cases. But I totally echo what Chris is saying. The future of digital assets then is only looking brighter once you solve that first step.
Yeah, to build on what Chris and Ben have already laid out, KYC and solving for institutions using KYC credentials and KYC models issued by each other has been a problem even before we've had all of the digital asset blockchain initiatives. Like, we've been breaking our heads on this for like decades now. And it's less about the technology, it is more about like whose liability, like whose responsibility is it, like what formats do we use, like how do we all agree on using the same standards and formats and infrastructure. So this is where, as Ben said, it's really exciting that there's all this technology that's coming up from the Web3 world. And we know it's not directly applicable to the financial services use case, but there are primitives from there which we could like stream together and actually make an end-to-end use case. So it's super exciting. Like, as we could be verifiers, we could be issuers, but more broadly, we could help adoption of digital identity in a scalable way for all of us, which traditional institutions, given the mass and volume that we have in terms of transactions, like if you're able to get this right, we can bring scale, and that gets me really excited.
Well, I think this is very interesting, no? And now we will discuss about the use cases, but from my experience also is that the banks, they have armies of AML compliance, literally. I cannot think on a better issuer in the world with better systems. And yes, maybe before, and now you can go through the use cases, but also I remember that when I was at the bank, we started to create somehow an alliance around R3, Corda, and all that. Then, apart from the use cases that you have, how do you see, which are the conversations inside the banks about an alliance? Because I cannot imagine a better network that if you work together. Then, yes, how do you envision this? Maybe we can start with you.
Yeah, so hopefully something will come out of this today and here on. But we know that there are a couple of initiatives, these consortium initiatives, for some reason, have never really taken off. But I think what should, at least if it were up to me, the way I would approach this is just pick a couple of use cases, understand what's the value prop for different institutions coming together, and actually design the standards and model with an eye to what's coming. But start small and build on it, because we've seen so many of these initiatives where 10 banks come together and then things just move really slow because people can't agree with each other on things. So I think it helps to build momentum. It helps to show value, because we were discussing about this over lunch as well. It's not like identity is not something that banks can directly monetize, right? It's an enabler for digital custody. It's an enabler for tokenization. It's an enabler for even banks looking to put things on public blockchain, because for us, the basic things to be solved are identity and privacy. So I would say start small, demonstrate value, and build iteratively.
At least for myself, I count myself as not a single chain maxi, but I am a private chain denier. I personally don't find much value in the innovation cycle around for what private chains can offer. And because they come with such a high cost and they don't really protect against the potential that you're going to have coercion or some sort of collusion of members, it ends up being a large infrastructure that nobody really wanted. I think this is naturally where public chain is a public infrastructure. And it's been designed from the onset to be against collusion, against coercion, against censorship. And although that may have many drawbacks in terms of who you're using those gas fees to get on chain, the benefits are innumerable for what you can build on top of that. And I think the idea of decentralized identity is the best utility of this new infrastructure. It's one where we all have this common challenge where we want to express who we're going to allow in either traditional finance use cases or even in the future digital asset use cases. That's a great one. And being able to both post what DIDs, verified credentials we've issued, but also what we've revoked, this really solves the cross-border type use case. So I think this is where I think if we start, as many banks start to agree on what those standards could look like, it ends up being something that promotes where Web3 could go.
Okay, then can I say, wrapping up, that for you, digital assets could be a very good use, and for you it's more that there are no borders, or how this is global somehow? Is this what you have in mind? Because I see, well, which I like. But
I think there are absolutely going to be borders. That's not a challenge to sovereign authority. Sadly, as much as we're in a Web3 conference and it's permissionless, the real world does have permission. And I think this is going to be something that the banks have to play both sides. We want to use the public infrastructure because it goes cross-border, but we're going to make it permission for the type of protocols that we have to, because that's what our regulators require us to go do. This, though, can work. If the regulators declare that this particular public chain is acceptable as a valid explorer type scenario, we're waiting on some of those regulations still, then it could really, really help solve some of the challenges that the regulators want us to do. Reduce fraud, reduce AML, make sure that we have participants, using products within their sovereign region. That these things I think they want.
Great, thanks. Please.
Yeah, maybe also back to the question about like how we could use it. I mean, it's obvious that the onboarding processes and ongoing KYC processes are the main target, especially for traditional or traditional banks, I would say. I would say that also what we see in the market and with some clients is that in the virtual asset service provider ecosystem, that there's also the demand to fulfill the KYC requirements that they are obliged to have, and sometimes it's costly for them to do that. And if we have like some sort of an SSI solution in place that could that is working, that could be a very good complement. But I would agree with what you have said, and there are like a couple of prerequisites, right? We need to have like a clear incentive system in place, right? If verifiers and issuers are incentivized in the right way, then that's absolutely a clear precondition. The other point is then to what extent can we like move one credential to the other entity? What are the legal and AML, etc. requirements? And then lastly, it's also about standards and just filling the same data fields, right? Just to get that clear, right? Because we can have like very good technology in place, but sometimes it's in what we have experienced in the very costly and time-consuming KYC space that it really comes to the nitty-gritty things that need to be there.
Then we can say that apart from the standardization, you think that we need to fix a problem of monetization in order that there is more adoption and this alliance that we were describing somehow?
Exactly. I think that, of course, for example, just taking the bank perspective again, we have the data, we can issue verifiable credentials, but then the question, there are multiple like ways how to do it. Is it you want to get like some sort of compensation when you do it so that the holder is being expensed, or is it like a mixture out of the holder and the verifier? You can argue like in many different ways, but there has to be some common standard that all the market participants agree to, that the ecosystem and incentive system is in place.
If I can just add a point on monetization, like it's interesting, like because there's a model where you obviously need to be compensated for like the service directly provided, but I think the bigger impact would be how many new use cases this identity solution enables, which today you can't have a solution for simply because there's no way to ascertain who is the person at the other end. And like it was interesting watching the earlier panel on proof of humanity because for a lot of crypto use cases when you're fighting bots, like we see that that is your core problem to solve. Whereas for financial institutions, it's a completely different problem, right? Like, yes, you're a human, like that's the starting point. But to actually figure out what's your identity, your real world identity, what's your tax residency, what's your investor qualification status, like there's so many layers on this that being able to like leverage some of the technologies, especially around ZK and privacy, and build these like usable solutions. I think beyond direct monetization, I also think that there is this huge value in the use cases it will unlock. And sorry, one additional point on like why SSI, because one of the reasons we couldn't solve this problem in the traditional world is like would Citi just directly, or our compliance folks just directly rely on KYC done by HSBC or DB or Sony Bank? Like, of course not. Like they said, they don't even trust each other within the bank, like different business units. But with SSI, you could have like the flip side of each of us owning our own identity as we also own the liability around our identity, right? So it's like, it's no longer Citi relying on HSBC or DB to like, for the full scope of that, but it's also the user taking on some ownership. Like, yes, I do give you permission to leverage somebody else's verification for this use case. So that's also very promising from a use case perspective.
Then you mean that each individual should be responsible and could be punished, no? Okay. Thanks.
Yeah, so we are the bank and we have some features. Some banks are strong for the institutional B2B service, and for example, Sony Bank is more strong for the retail or to the end customers banking service. So we have, and also regulation point of view, some banks covers for some countries' regulation, and some banks covers for the other countries' regulation. So we have lots of opportunity to collaborate with. And as you mentioned, along with the principle of the SSI, yes, the customer owns the rights of the information of their own information. But if customers allows us the KYC, the information could be shared in the future. So that could be possible, we believe.
Thanks. Then, yes, going to the two main buzzwords that when we go to different meetings, and we have already spoken about that, we will speak later about KYC, but digital assets and risk-weighted assets is the word of the moment. Obviously, there are the typical use cases about one picture of Picasso that it's tokenized, but in your cases, inside your companies, and what can be disclosed and it's not confidential, I think that this tool is perfect because you need verifiable credentials in each one or in derivatives, in real estate. Then which are the use cases related with digital assets and RWA that you see that can be triggered through DAD and SSI? Then let's start with you, Nisha, again.
So for me, there's obviously lots of use cases like that everyone's going to speak about, but I'm going to focus on private markets. So you spoke about real world assets. I think real world assets are an evolution of real world financial assets. Sorry for mixing that up, but basically private market assets, which are not as easily accessible. They don't trade in the secondary markets like public assets do, but there's a huge, like a 13 plus trillion market between private equity, private credit, and real estate, which asset managers would like to distribute more broadly to smaller investors, and retail investors would like to get access. But this infrastructure is very manual and offline, and it's not efficient. And this is actually a classic use case for blockchain to solve this issue. And it doesn't work without actually having those, like some kind of dynamic credentialing. But here again, ZK comes in because it's about establishing that whoever is interacting as an investor with the use case is authorized and approved to access this asset, but it can be set up and structured in a way where the entity that's actually doing the issuance does not see the identity. But because that is how the world works today, right? Like in the traditional ecosystem, you have all of these banks that take the Swiss private banks. They've super controlled about how much of investor information they disclose, even to other counterparties they work with. So the other side of transparency is to also provide the requisite privacy inbuilt. So only the information that needs to flow through for validating credentials. And this is where I think selective disclosures and things like that are like super promising. We just need to figure out a way to make the whole thing work for banks.
Yeah, the opportunity for real world asset tokenization, I think the WF said it was $30 trillion by 2030. There's been a lot of debate as to exactly what the number is going to be, but HSBC definitely sees potential here. We've already started tokenizing bonds, which we did in Luxembourg and Hong Kong publicly. Late last year, we started also doing for retail customers tokenized gold. And I think that's just the tip of the iceberg. Really, I would imagine in the next few years, we're going to see more and more of equities and other products start to become tokenized. The challenge, though, is that many of these currently are being done just in a private chain, not necessarily adopting a standard that allows interoperability across multiple participants. A big challenge to that is identity. It's being able to ensure that we know who the owners are. This isn't the bank saying it, it's the regulators. These come back from the laws from SFC or SEC and other types of securities regulations that require us to know who are the participants for many good reasons. If we have decentralized identity, the complement to these products in digital assets is immense. It means that my asset is now unlocked theoretically to trade not just within one particular secondary market, but potentially globally around the world. And the composability that you can put with programmability on top of those digital assets makes entirely new ecosystems that didn't exist in the existing digital form that we had previously in Web 2 and 1. So I'm pretty excited by the potential then for DID to complement digital assets. Well, I think Bitcoin and Ethereum as a permissionless asset are great. We're far away from that, but the real world asset tokenization is already happening. And once we complement that with DID, it unlocks a lot of the programmability that we need.
Okay, thanks, Wayne. And how is Deutsche Bank watching at this, please?
Yeah, so maybe it makes sense to have like some sort of bifurcation in mind when we're talking about different use cases. And you can debate a lot about that, but you can say that on the one hand side, you have the crypto ecosystem, which is basically about native cryptocurrencies, which is about more being permissionless, which has like the whole DeFi world, which is kind of replicating the services and products that we see in the traditional market. And then we have I would call it the DLT-based financial markets, which are basically kind of looking into like how traditional value chain, for example, of securities issuance from, being held custody is being transformed, but with power of DLT. I would argue that both worlds will profit from a sound digital identity or SSI solution, because what we have seen also in a couple of other examples of the markets that there are identity solutions when it comes to like white blacklisting, right? It's easy to implement. Everybody can do it for a use case or a POC, small scale. But there are like clear downsides to it when it comes to like privacy and also scalability. And there are other examples, for example, soul-bound tokens. You can issue them into one wallet, which is also okay. But then depending on how you do it, there are also privacy concerns, and it's tied to a specific wallet. So, and what we think is that the SSI would enable, or inform those use cases in a scalable manner. And we also together with Privado have tested that in a technical POC, where we, for example, used the verified contract from Privado to then actually make user access digital funds on the one hand side, and then more on the visionary scope, I would say, institutional DeFi when it comes to liquidity pools where, for example, tokenized assets from a traditional sense would be in there, be it like tokenized forms of money, tokenized forms of securities. We then can or could leverage actually the power of DLT, but we also need to know who's accessing or has like the possibility to interact with those pools, and SSI could be a very good complement for that.
Totally. And then, Kaya, we have seen that you are very active already with esports, with NFTs, anything else that you think that can be brought through the BID?
Okay, thank you. Could you share the presentation material? Yes.
Yes.
Yes, a little bit I explained on the previous presentation sessions, but let me explain something about the related topics. So next page, please. Yes.
Yes, we have a couple of minutes, but because we are already running out of time and Alex will tell me that we need to cut, but yeah, let's make it quick.
Okay. So, as I little bit explained, under the Sony Group, we do lots of NFT activities, enhancing the excited fan community or enhancing the experience of the cheering. So these are the example, for example, for the concert, music, and also stable coin of this activity, STO with NFT or esports. So we can imagine that under the Sony Group, we are the entertainment company. So we can imagine the world the customer can generate some playground ecosystem, for example, in the game segment. So the customer or player can earn the token, and that could be used in, for example, to watch the movies on the picture service. So in that area, stablecoin would be important. So that's the most expected use case under the entertainment company. So Sony Bank want to support for this financial function. And if we see about the regulation point of view, yes, KYC would be necessary with wallet or with stablecoin. So it depends on the country's regulations.
And do you see Japan regulators open to that?
Yes, already we are discussing with the Japanese regulations, but it's not settled yet about the stable coins, but also wallet also. But it could be set in Japan also. So in that area, we need to treat the customer's information correctly under the regulation. So in that area, digital ID technology would be very important.
Perfect. And coming back on the regulation side, maybe you can tell us something about the areas and how do you see the implications, and then we go to Shanghai and UK.
Yeah, so on the others, I think one important aspect for banks in Europe is that at some point you just need to accept your DI requests, right, and need to handle those. And of course, at first glance, right, there is like some compliance costs attached to that. Because you need to implement this, but I would argue that there are also a couple of advantages for that, right? So, I mean, we discussed the kind of cumbersome KYC processes that might benefit from that, because then in the end you make the customer experience much better, much faster, and as a bank you also decrease the time to revenue. For example, it needs to be really specific in what kind of use case you're talking about, but about eliminating or reducing the need for video verification or wet ink signatures, etc. I mean, you see that all the time. And the other piece would be that with harmonization across the EU, it's also expanding a little bit the market in a sense that it makes it easier for other customer groups to be accessed. And also banks can, look into a couple of things and then, actually use their trust anchor kind of role to actually act as a qualified trust service provider, for example.
Thanks, Ben.
So the regulations and digital assets are very important in many of the markets in which we operate. Most of them are agreeing around a principle of like activity, like risk, like control. And so the identity is a key aspect of one of the controls that's used for many types of transfers. This could be travel rule compliance or any number of other type of cross-border aspects. And being able to incorporate a DID could be an element of a control that's necessary for combating financial crime or AML. I think it can also bring a lot of efficiency where we didn't have this present and consistent standards. It allows a lot of market participants to agree what these new standards should look like and hopefully reduce costs and make a better customer experience for legitimate customers that are doing these type of transfers.
I think in the UK, there is generally a very consultative approach on things around tokenization and digital assets and regulations around that. I think as far as identity is concerned, it's early. And as far as technologies like ZK and MPC is concerned, it's even earlier. And this is a journey of like understanding and learning and actually seeing how it addresses risks that you're exposed to today in the traditional system that we're solving for using these technologies. And the other angle being, as banks look to build more blockchain use cases, how does this actually help solve for the gaps that the regulators see there? Being able to actually articulate the use cases, articulate how the technologies work, because there's this general mistrust about things we don't understand reasonably so. And as a regulator, there's obviously a lot at stake, but I think we're sort of in the stages of learning collectively. And I think this is where like banks actually doing these use cases, doing POCs, which are low risk environment just for us to like test and learn, but actually feeding the learnings back to the regulator and sort of iteratively figuring out, okay, this is where the technology is useful for, and these are the problems it will solve, and getting to a stage where they can actually comfortably make policies around it. That's sort of how I see this panning out.
Yeah, what I have seen is that we have been experimenting, and now maybe it's time for monetization or reducing costs. In fact, we are discussing that with a lot of you, and you know that better than me. Then I mean, we are almost finishing, and I want to tell you that for me and for us, it's a privilege that you have been here from all these locations. Also, the effort of the BD team is really appreciated, and I want to say thank you to my own team. But thanks for being here. I think, and I hope that Privado will do more work with you in the next months and years. But then, to close this panel, you have objectives for sure. You have a roadmap for sure that you discussed internally. Then maybe, I don't know, in 2-3 phrases, which are the objectives that your department, your digital transformation teams have, especially, of course, related with identity in the next year or in the next 2 years? What are you working about, please?
Okay, so as Sony Bank, our strategy is with concept is that borderless digital banking for more fun. And currently, Sony Bank is providing the internet banking service only in Japan. And also, we want to expand the business all over the world. So, lots of opportunity with you to collaborate with. So, regulation point of view or technology point of view. So, let's connect and also let's talk about the opportunity to collaborate with. Thank you.
Thanks.
Yeah, so following from the discussion, EIDAS is definitely one thing that we need to consider, need to be prepared for. On the other side, I'm in a team that is looking into various digital asset use case from the corporate bank and investment bank perspective. One thing that we're actively working on is implementing a digital asset custody solution, which will then be the nucleus for a couple of other things in the tokenization space, etc.
Thanks, Chris.
Very similar answer. We're also looking at digital asset custody, and we're also looking at tokenization. I think this is going to be a common theme among many financial institutions in the next few years. I think, though, there's a bigger opportunity outside of just what we traditionally do, which is custody, to look at even how we can incorporate self-custody type capabilities back into our products and services. This is a new area. Most banks have never had to think of the concept of self-custody. But as we get into a digital journey, self-custody inevitably is part of that equation and helps solve a number of the regulatory compliance challenges that have plagued many of our products and services for many years. I think that's going to be the big opportunity. And I'm particularly excited that many other financial institutions are looking at this because there's an opportunity to define those standards together and make it better for the end customer.
But then before we jump to Nisha, sorry, then if you are working on the same, why are you not speaking, or why there is not this alliance that we discussed before? No, but because I know that we are all trying to reinvent the wheel, internal institutions, then at the end we are all trying to fix the same problem, no? Then are there thoughts about that, or I don't know, which is the mood? Or
It is challenging to get permission within a bank. Unlike the permissionless world that some of us have operated in before, getting the approvals to really do anything can take a significant amount of time. I think you guys described it as 6 years of planting the seed of bamboo, and then you get to the forest of the trees. Well, we're just now still seeing some of those small saplings growing up. I do think, though, that we're planting that seed, and a big part of us being here is kind of seeing that vision happen. We want to get to a point where in 6 years' time, or well, I hope it's a lot less, we actually have some joint operations together.
thanks, Ben.
For me, all of the above, so I'm not going to talk about that. But what would also be a priority is building the enablers like identity, privacy, oracles, and figuring out interoperability. I know there are solutions for interoperability in the public blockchain world, but actually figuring it out as it works between traditional assets and digital assets between, sadly, private permission ecosystems and more broader but still permissioned ecosystems. Figuring out how all of this works and building use cases and actually building a viable business proposition, I think that's where a lot of the effort's going to go. But I mean, just one last point from me. Like, I think on the institutional side, we see a lot of value in the technology that everyone's building, and it's super exciting and super interesting. And we have the sad and painful job of trying to make that fit within the new product approval framework and get permissions to do a lot of these things. But it's really amazing to see the kind of development and technology that's coming up, and hopefully we'll sort of incorporate and build use cases that works using everything that you're all building. Thank you.
Yeah, thanks, Nisha. I think that you are right, no? And all of you are trailblazers trying to open these new roads. And yes, that's something in the chain of command of a bank that could be very painful. But congrats. I think that you will be very important for the whole ecosystem in the future. And thanks for being here. And yes, I hope that we continue working together. Thanks.